Listen closely. Bitcoin just broke above $80,000 for the first time in over 3 months. This is not a drill. The last time we saw this level, BTC was on its way to $126,000. But here's what nobody is telling you. The indicators behind this breakout are flashing massive mixed signals. Over $150 million in short positions just got vaporized in a single hour, and the market is now sitting at a pivot point that could send us to 85,000 or back to 76,000 within a matter of days. I'm going to walk you through exactly what's happening on the charts, what's driving it, and then, most importantly, I'm going to give you 3 precise trading strategies with exact entry prices, stop losses, and profit targets that you can execute right now regardless of your risk tolerance. Stay with me until the end, because the confirmation signal I'm about to show you is something that most retail traders will completely overlook. Here's the bottom line right now. Bitcoin has entered a breakout confirmation phase. The daily and weekly charts are screaming strong buy, but the hourly and intraday oscillators are leaning bearish. This is classic consolidation after impulse behavior. We are not in a confirmed breakout yet. We are at the gate. The multi-time frame picture tells a very clear story. Higher time frames are bullish, lower time frames are exhausted. My base case, Bitcoin consolidates between $78,500 and $81,000 for the next 24 to 48 hours before making a decisive move. The bull-bear line in the sand is $81,500 on a daily close. Above that, and we are structurally in a new uptrend targeting 85,000 and then the 87 to 92,000 zone. Below 78,200 on a sustained hourly basis, and this entire breakout narrative starts to crack, opening a path back to 76,000, which is the realized price floor according to CryptoQuant's latest data. Now let's get into the chart work. Pull up your screen and put it on the daily time frame. This is where the truth lives. Look at the moving average structure. Bitcoin is currently trading around $80,260. The MA50 sits at roughly $79,162. The MA100 is at $78,769. The MA200, the big one, the line that separates bull markets from bear markets, is at $77,964 on the simple and $78,311 on the exponential. What do you notice? Price is above every single major moving average. MA20, MA50, MA100, MA200, all of them. This is textbook bullish alignment on the daily chart. Every major moving average is sloping upward or flattening out ready to curl higher. This is the first time since late January that we've seen this configuration, and the last time it happened, Bitcoin launched from $76,000 to over $120,000 over the following 2 months. I am not saying that's going to happen again. I'm saying the structural conditions are forming. Now zoom into the 4-hour chart. What you see here is a bullish structure hugging the EMA 50 at around $77,830 as immediate support, while the EMA 200 at roughly $74,828 anchors the longer-term floor. The price is stair-step higher, higher lows, higher highs, since the mid-April lows near $60,000. The 4-hour RSI is sitting at around 44. That's sub 50, meaning the momentum following the spike to 80,685 has already faded. This is completely normal. After an impulse that triggers $150 million in short liquidations, the market needs to digest. The RSI cooling off from overbought to neutral bearish territory is actually healthy. It's building the energy for the next leg. If RSI had stayed at 70 plus while price stalled, that would be a bearish divergence signaling imminent reversal. Instead, we are seeing price consolidation with RSI cooling. That's a bullish continuation pattern. But here's where it gets tricky, and this is the part most people miss. The MACD on the daily chart is still deeply negative at around -82. This is a lagging indicator. It's still processing the data from the sell-off that happened weeks ago. The signal line hasn't crossed yet, and the histogram, while narrowing, is still red. The stochastic is at 98.5, deep overbought territory on the short time frame. The CCI is at -77, bearish despite the price surge. When you see a price breakout that is not yet confirmed by momentum oscillators, what you're really seeing is a market that has front-run the indicators. The price moved first. Now the indicators need to catch up. This is what creates the consolidation window. The market is pausing, letting the MACD histogram flip green, letting the RSI reset above 50, letting the CCI climb out of the negative zone. Once those confirmations align, that's when the next impulse leg triggers. But if price rolls over before those confirmations materialize, the breakout fails. That's the trap. On the support and resistance side, here are the numbers you need tattooed on your screen. Immediate resistance, 80,685. Today's high, the exact level where sellers stepped in. Above that, 81,500. That's the cost basis resistance level identified by CryptoQuant and Glassnode, where recent buyers are sitting at break-even and will likely sell into strength. A daily close above 81,500 turns that resistance into support and opens the path to 80,500, then 87 to 92,000. On the downside, immediate support sits at 79,162, the MA50 on the daily, which held beautifully during today's pullback from the highs. Below that, 78,224, today's low and the base of the current daily range. Below that, 77,964, the MA200, the institutional line in the sand. And the hard floor is 76,000, the realized price zone where CryptoQuant says new money cost basis sits. Break below 76, and this rally was a head fake. So why is Bitcoin moving right now? 3 catalysts, and they're all hitting at the same time. Number 1. Project Freedom. On Sunday, May 3rd, President Trump announced via Truth Social that the United States would begin escorting foreign commercial vessels through the Strait of Hormuz. This waterway had been effectively closed due to US-Iran tensions, stranding cargo ships and driving oil prices higher. Project Freedom is a de-escalation signal. It tells markets that the administration is prioritizing economic stability over military escalation. Risk assets, including Bitcoin, rallied immediately. Over $160 million in Bitcoin shorts were wiped out within the first hour on Monday. Total crypto liquidations crossed 300 million. This is the headline that flipped the sentiment switch from cautious to risk-on. Number 2. The Clarity Act. The U.S. Senate has finalized a compromise version of this comprehensive crypto market structure bill. The final sticking point, stablecoin yield provisions, has been resolved. The new language restricts crypto firms from paying interest that is economically equivalent to bank deposits, while preserving usage-based rewards for transactions, payments, and staking. Circle stock surged 20% on the news. Coinbase jumped over 7%. Over 100 crypto companies are now rallying behind the bill, pressing the Senate Banking Committee to schedule a markup, potentially as soon as the week of May 11th. Now, there is a wrinkle. One Republican senator is threatening to block the bill over ethics provisions targeting Trump's crypto holdings. Polymarket odds of 2026 passage have dropped from 65% to around 46%. But the signal is clear. Regulatory clarity is closer than it's ever been. That's the structural bull case for Bitcoin, and the market is pricing it in. Number 3. Institutional accumulation. On May 1st, U.S. spot Bitcoin ETFs recorded a staggering $629.8 million in net inflows. BlackRock's IBIT alone pulled in $284.4 million. Fidelity's FBTC added $213.4 million. This was one of the largest single-day inflow totals of the entire year. April as a whole saw roughly $2.44 billion in total Bitcoin ETF inflows, the strongest month of 2026. Total AUM across all spot Bitcoin ETFs has now surpassed $100 billion. Cumulative net inflows since launch sit at roughly $58.7 billion. These ETFs are absorbing far more Bitcoin than the 450 BTC mined daily, creating a structural supply squeeze. BlackRock now holds over 810,000 Bitcoin. Pension funds, wealth advisors, and long-term capital allocators are using ETFs as their preferred entry point. And critically, While Bitcoin ETFs are seeing massive inflows, XRP and Solana ETFs are seeing outflows. This is not a crypto-wide rally. This is a Bitcoin-specific institutional accumulation event. Bitcoin dominance just hit 61%, the highest since November 2025. Capital is rotating out of altcoins and into Bitcoin. That is a quality over beta signal that historically precedes major Bitcoin runs. Now let's talk about the cross-asset picture, because Bitcoin does not trade in a vacuum. The S&P 500 is at all-time highs. The Nasdaq just printed 13 consecutive up days, the first time since 1992. AI earnings from Intel, TSMC, and Anthropic's new Mythos model have reignited the tech rally. Bitcoin has lagged equities for most of 2026, down roughly 11% year-to-date, while the S&P is up around 5%. That gap is starting to close. Bitcoin is playing catch-up to equities, and if the risk-on regime in stocks continues, Bitcoin has significant room to run before it reaches fair value relative to the S&P. At the same time, gold continues to grind higher. Silver has surged over 150% in 6 months. The commodity supercycle thesis, articulated by analyst Colossal, argues that Bitcoin is next in line to catch this bid. He called $85,000 FUD. Whether you agree or not, the macro backdrop of de-escalation, institutional demand, and regulatory progress creates a powerful tailwind. But, and this is critical, the macro headwinds have not disappeared. The Strait of Hormuz remains closed despite the escort operation. Iran has warned that any U.S. intervention will be treated as a ceasefire violation. Oil prices are still elevated, feeding into inflation expectations. The Federal Reserve leadership transition is underway. Kevin Warsh is expected to be confirmed as the new Fed chair, replacing Jerome Powell. Markets are pricing in zero rate cuts for the remainder of 2026. The higher-for-longer interest rate environment that has capped Bitcoin all year is not going away. A renewed escalation in the Middle East, a hot non-farm payrolls print this week, or a breakdown in the Clarity Act negotiations, any one of these could reverse the rally just as fast as it started. This is not a market where you marry your position. This is a market where you date it, manage it tightly, and let the price action confirm before you commit size. Now let's get to the part you're actually here for, the 3 trading strategies. I'm going to give you exact entries, exact stops, exact targets. Write these down. Strategy 1, conservative, high probability, designed for capital preservation. You're waiting for the confirmation signal. The trade only triggers if Bitcoin prints a 4-hour candle close above $81,000 with RSI above 55. That's your dual confirmation entry condition. If and only if that happens, you enter long at market. Your stop loss goes at 79,800, below the MA50 and below the psychological 80,000 round number. Your first target is 83,500, roughly 1.5 to 1 risk reward. Your second target is 85,000, just over 2 to 1. If price reaches target 1, move your stop to break even. The failure condition is simple. If Bitcoin fails to close a 4-hour candle above 81,000 within the next 72 hours, the setup is void and you stay flat. This strategy will keep you out of chop and only commit capital when the breakout is confirmed. Probability of success, in my assessment based on the current structure, is around 60%. But the key benefit is that you avoid the fake-out scenario entirely. Strategy 2, standard risk profile, good risk reward, entry on a pullback to support. Most of you watching should be looking at this one. The premise: Bitcoin has just spiked to 80,600 and is now consolidating. The impulse was real. The retracement is healthy. You want to buy the pullback, not chase the breakout. Your entry zone is 79,200 to 79,500, right around the daily MA50, which has acted as dynamic support all week. Wait for a 15-minute bullish engulfing candle or a hammer candle to form within this zone before entering. Your stop loss goes at 78,000, below today's low and below the MA100. That's roughly $1,200 to $1,500 of risk depending on your exact entry. Your first target is 81,500, just below the cost basis resistance, where you expect selling pressure to emerge. Your second target is 85,000. Risk reward on this setup, approximately 1 to 2.5 on the conservative side, 1 to 4 if target 2 is achieved. At target 1, take 50% off and move your stop to break even. Let the remaining 50% run with a trailing stop of $800, roughly 2 times the ATR, to capture any extension toward 85,000. The failure condition, a 15-minute candle close below 78,000 invalidates the setup. Cut immediately. Strategy 3, aggressive, high risk, for traders who understand that the best entries often come when it feels most uncomfortable. This is a breakout chase play on a 5-minute time frame, designed to capture continuation if the momentum from the $80,000 break is not yet exhausted. If Bitcoin pulls back to 79,800 and then prints a 5-minute candle that closes back above 80,200, that's your trigger. Entry at market on that candle close. Stop loss is extremely tight, 79,500, just $700 below entry. Your first target is 81,000. Your second target is 82,500. Risk reward is approximately 1 to 1.7 to 1 to 3.8. This strategy only works if volume on the entry candle is above average on the 5-minute chart. If volume is thin, the move is weak and you stay out. After hitting target 1, move your stop to break even immediately. This strategy has the lowest probability of success, maybe 35 to 40%, but when it works, it captures the fastest money. Only use this if you are comfortable being wrong and taking a quick small loss. Do not, I repeat, do not use this strategy with size. This is a 1% of account trade at most, regardless of which strategy you choose, and regardless of your conviction level, there are ironclad risk management rules that must be followed. Number 1. Your total risk on any single Bitcoin trade must not exceed 1 to 2% of your total trading capital. If your account is $10,000 and your stop loss is $1,200 per Bitcoin, you can trade at most 0.16 Bitcoin, roughly $12,800 in notional exposure. Number 2. The U.S. non-farm payrolls report drops this week. Do not hold open positions into that release unless you are using defined risk option strategies. The volatility spike can rip through your stop loss in milliseconds. Number 3. Your stop loss is not a suggestion. It is a survival mechanism. Blow through your stop, and you blow through your account. Trading without a stop loss on Bitcoin is not trading, it's gambling. And the house always wins in the long run if you give it enough time. Let me tie this all together. Here are the 2 things you need to remember from today's session. First, Bitcoin is in a breakout confirmation phase. The daily and weekly structure is bullish. The intraday momentum is exhausted. Consolidation between 78,500 and 81,000 is the base case. A daily close above 81,500 confirms the breakout and targets 85,000. A break below 78,200 threatens the structure and opens a path to 76,000. Second, this move is not speculation-driven, it's institutionally funded. $630 million in single-day ETF inflows, a $100 billion spot ETF complex, BlackRock holding over 810,000 Bitcoin. This is structural demand, not retail FOMO. That doesn't mean we can't get a sharp pullback. We absolutely can, but the bid underneath this market is deeper and more durable than anything we've seen in previous cycles. Tomorrow, the key event to watch is the non-farm payrolls data and any development in the Hormuz situation. If NFP comes in hot, the dollar could strengthen, risk assets could sell off, and Bitcoin will test that 78,200 support. If NFP comes in soft, rate cut expectations could return, the dollar could weaken, and Bitcoin could make a run at 81,500. Also keep an eye on polymarket odds for the Clarity Act markup. If those odds jump back above 55%, that's a massive bullish catalyst that the market has not yet fully priced in. Here's what I want from you right now. In the comments below, tell me, are you bullish or bearish on Bitcoin this week? And what's the one price level that would make you flip your bias? Put your answer in the comments. I read them, and I'll respond to the best takes. While you're down there, smash that like button. It tells the algorithm that this content matters and helps more traders see these daily breakdowns. Subscribe and hit the notification bell. We cover all 8 key assets every single day: Aussie dollar, dollar yen, and the Nike, Eurodollar, gold, crude oil, Bitcoin, the dollar index with the S&P 500, and cable. You do not want to trade tomorrow without watching tomorrow's video. I'll see you then. Trade safe, trade smart, and respect the risk.